What is up guys, my name is Ignas, welcome back to the channel. Today we will be taking a deeper look into Walgreens Boots Alliance, ticker symbol WBA. This week we already compared it to CVS, and it seems that there is now quite some opportunity, at least with the dividend yield, though not so much with the growth part. On the year to date the stock is down for 12.24%, losing $6.50 per share. 1 year situation is a bit better, down 10.5%, but there have been quite some losses in 5 years, as in 2017 the stock was trading at almost $83 per share, and in those 5 years lost $36, down 43.88%. But at least the price to earnings is now very compelling at 6.28, and the dividend yield did increase by quite a bit, currently at 4.1%. So for today's analysis, first we'll take a look into the history of financials and fundamental ratios, then where analysts think the stock will be trading next year, after that what Superinvestors are doing with the name, and lastly we'll take a look into the technicals of the price chart. I hope WBA will prove to be an interesting one to look into, so let's start. First we'll check revenue, and this is the history of the last 5 years. Back in 2016 they were bringing in $116 billion on the trailing 12 months. Then in 2017 that increased to $120 billion, 2018 up to $134 billion. Then in 2019 we had a very poor quarter with $17 billion, almost 50% down for the quarter year over year, so that accumulated to only $120 billion for the year. Then one more poor quarter in 2020 with $25.9 billion, so $122 billion on the trailing 12 months. And with the most recent quarter of last year, we are back at the highs with $134.9 billion. So revenues have been steadily increasing up until 2019, then we had that huge drop, and for another year quarterly revenues decreased. After that, only in 2021 they did come back to the highs. So pretty much we are now at the same revenue levels we had back in 2018 and 2019. Not much growth thus far. Second step we'll check is price to earnings. We do know that the price have been decreasing in the last 5 years. So in 2017 price to earnings was almost at the highest with 18.81. Then in 2018, as the price was going lower, price to earnings went down to 14.97. In 2019, with earnings increasing, price to earnings still going down to 11.96. And with 2020, as earnings slowed, the stock price also went lower, so price to earnings was at 10.77. As earnings decreased several times in 2020, we had the price to earnings surging to 68.86, and then there were 2 quarters with negative earnings, so PE is at 0. But now with the latest quarter in and the price not running that much, price to earnings was just under 6, and recently still quite close to it. So earnings did drop in 2020, with price to earnings surging way higher than usual. But right now with the PE at almost 6, we are pretty much the lowest it has ever been in the last 5 years. Next up are the shares outstanding. So back in 2016 they were at 1.088 billion shares, then in a year in 2017 we had it at 1.011 billion, with 2018 we had it at under 1 billion with 0.95 billion shares, then in 2019 it was at 0.89 billion, 2020 0.87 billion shares, and with the most recent quarter in there was a small increase, but only 0.35% year over year, so not a huge add with the whole picture. So with this information we can find that in last 5 years, Walgreens bought back around 220 million shares, which at the current price of $46.50 is a buyback worth of over $10 billion. So it's definitely a huge plus that they are buying back shares and giving value back to shareholders. But there is another way to give back to shareholders, and that is paying dividends. Here is Walgreens' 5-year dividend yield history. We already looked into it when we compared it to CVS this week. You can check on that comparison, I will leave a link for it in the description below. But for further analysis, let's go to my dividend investing watch list. So this is the same 5-year dividend yield history for Walgreens, and on average in 5 years the yield was at 3.19%. The worst time to get in was back in 2017, where the dividend yield was at 1.79%, so 43.94% under the 5-year average. And the best time to buy was by the end of 2020, with a yield of 4.78%, 49.71% over its 5-year average. But now in 2022, we are currently looking at the dividend yield of 4.03%, which is over those 3.19 5-year average yield, and to be exact 26.22% higher. So it is quite a decent time to get into the stock, at least for the dividend yield. If you would be interested in doing a similar analysis yourself with Walgreens or any other dividend paying company, you can do just that by following the second link at the top of the description. Since we already looked into the history, now let's take expectations. So here we have next year's analyst price targets for WBA. Predictions range from the lows of $45 to the highs of $70 per share. The average out of it is $53.55, and currently the stock is trading at $46.40. So on average, analysts predict that next year the stock will be trading higher for 14.3%. Let's also take another angle. We have next year's earnings estimates from 15 analysts, and on average they predict that in 2023 Walgreens will be bringing in $5.13 per share. If we assume that price to earnings remains the same, then out of earnings, analysts suggest that the share price will be up for around 2%. Overall, analysts are somewhat bullish, with predictions for the share price to go up from 2 to 13%. Now next part are Superinvestors. So currently Walgreens is being held by 4 portfolios. One of those recently started a new position, but unfortunately 3 of them trimmed. So Aerial Appreciation Fund reduced by 6.68%, still holding 887,000 shares, which is 3.42% of their portfolio. Then there was a small reduction from Allstate Capital Management, where they trimmed 5.26%. and currently still have 360,000 shares. And then there is this huge reduction on a small position, where Aerial Focus Fund sold 61% of their WBA shares and are currently holding the stock at 21,800. But there was at least one long trade, and that is Fairholme Capital. They started a new position of 24,000 shares, but that is still a very small part of their portfolio at 0.08%. So overall it seems that Superinvestors are quite bearish, as there is only one fund buying, and unfortunately majority of them decreasing on their positions. Now the last part I want to check is the chart. So in the beginning of 2022 the stock reached the highs of $55 per share, but after that started that huge decline. On the 18th, the 12-day moving average of the MACD crossed the 26th one to the lower side, and after that we had several red days in a row. There was a bit of a slowdown in the selling when the stock reached the 300-day moving average, but that lasted just by the first part of February. On the 14th the stock dropped to $47, and we had the bottom on the 24th, where the 200-day moving average crossed the 300-day one to the lower side, but that drop to under $45 seemed to have been a bottom. On March 3rd we had a bullish crossover in the lines of the MACD, and on the 9th the price went to the highs of $48.80, closer to that 100-day moving average. The concerning part is that we are currently having a few bearish crossovers. One is 50-day moving average going under the 100 one, and second 12-day moving average of the MACD going under the 26th one. So I would expect more selling at least in the next several days, but I'm also looking into a support at around $45 per share. Now that we did all the steps, let's make a quick recap. Few years back there was a huge revenue drop, and even though we are climbing back up, we only now reached the same that we had in 2018. With the price continuously moving lower, price to earnings is pretty much the lowest it has ever been in the last 5 years. Walgreens have been buying back shares, and in 5 years in total that was around $225 million. Now they are giving a decent 4% dividend yield, and it is also around 26% over its 5-year average. Analysts predict that next year the stock will go up and growth will be in between 2 and 13%. But Superinvestors are not convinced, as overall they are net sellers of the stock. Looking into the technicals, it's not promising for the short term, as we just had bearish crossovers in both moving average and the MACD indicators. So I would want to wait a bit before getting in, and my next support is at around $45 per share. So that was it. Make sure to support the channel and leave a thumbs up under the video. What do you think? Should we be buying Walgreens right now? Share your stance on the name in a comment below. If you would like to get access to my dividend investing watchlist, then consider memberships. By becoming a member, you will get access to Discord, where I share all my Google Sheets and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week we had an analysis on another company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.